Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zach's Top Stock Picks. I'm Brian Bolin. I'm the aggressive growth stock strategist here at Zach's, and I've got a top stock pick for you this week. So let's get right to it, shall we? All right, my top stock pick is AAR. And the ticker symbol for that is one that you should be able to remember. There's AAR, that's the name of it. And the ticker symbol right up here, it's AIR, air. There's a study about stocks that have ticker symbols that are words. They perform better. No one really knows why. It's probably a dumb reason, but it is what it is. This stock is Zach's rank number one. It's a strong buy. It's got an A for growth and a C for value. As the aggressive growth stock strategist, I like stocks that have a strong growth score because I am not so full of myself to say that I know when a stock is very valuable or not. I just want to see growth. If there's growth, I know it's worth something. And especially if the growth keeps on going, then I know it's going to keep on being worth more. At least that's my crazy idea. Call it crazy. All right, and we're in the aerospace and defense equipment, and we all know that that's hot given all of the recent geopolitical things, whether it's Venezuela, whether it's Greenland, whether it's Iran, whether it's Taiwan. There's all sorts of stuff going on in the world, and defense spending, the defense budget, that 1.5 trillion thing. So we can see that the company had earnings here at the beginning of December, or maybe that was even January. Maybe it was even the other week. So since then, the stock keeps moving higher, and we like the idea of a post-earnings drift higher after a beat. All right, it's a $3.9 billion company. Let's get to the numbers that we love to look at when we're looking at a stock, because we're process-based, and our process is to, number one, take a look at the earnings. Are they beating the number? And I see 4 straight beats of the Zacks consensus estimate, and these beats are trending higher. And, it looks like there's a little bit of seasonality in the numbers, but it's good. It's good. So we're seeing an 11% average. So the idea there is management communicating to Wall Street a beatable level? And yes, they are. They're beating the number. Next, we look at where are the estimates going right now. It's the foundation of the Zacks rank. And because we've seen a beat within the last week or so, we see the estimate for this current quarter going from $1.09 to $1.21. That's a big upside. Next quarter from $1.26 to $1.37 for the full fiscal year of 2026, which is in May. We go from 472 to 492. That was a nice move. And then for next fiscal year, 548 to 580. And that's all very recent because the company just reported and probably guided for future quarters as well. So the next thing I want to make sure is there good growth? And we can see this fiscal year, we're looking at $3.2 billion in sales, and that'll be good for 15% top line growth. Now, next fiscal year is a very long ways away, and right now the analysts are only projecting 6.5% growth, but it's still growing, and there's plenty of time for that number to move up, and especially with the idea of a $1.5 trillion defense budget, planned to be spent. So I think that number moves higher. All right, let's go to our valuation. You're paying 20 times forward earnings. And when you think about 16% top line growth in the most recent quarter, that's a fair price. That's a fair price. 2.5 times price to book. So value investors like to see a stock less than 3 times. So we're going to be making some value investors happy. 1.3 price times sales is good to see. I think that number could move higher, especially with the big budget, with the big defense budget. All right, operating margins going from 5% to 5.2 to 5.4. You're moving in the right direction. When you've got growing sales and increasing margins, you're going to have larger earnings, and that's what the Zacks rank is all about. All right, let's take a look at the chart before we call it a day. And here it is. This goes back quite a while, but we can see a general pattern. I'm just going to draw that line right there. Things are looking good just on the overall basis. But then we think about the earnings lines, and we can see that they've kind of trailed off these 2 years, but all of a sudden tip it up. And now this one is really ramping higher, right? So that's what we look at this chart. We can see that even while there was pessimism inside of some of these earnings estimates, stock held up pretty well. The green arrows, those are all earnings. Every time the company has reported earnings, and we can see that they beat the number consistently over the last 5 years here. But this stock really started to take off here at the $50 level at the beginning of last year. With the big defense budget, I think that the stock continues to move higher, and we get a good post earnings drift higher. It's AAR. That is my top stock pick for the week. Now I'm going to hand it over to another feller, Ethan Feller, my comrade here at Zacks. So take it away, Ethan.
Thank you, Brian, and hello, everybody. I'm Ethan Feller, stock strategist here at Zacks, and today I'm going to share with you my top stock pick of the week, which is going to be the company Amphenol. So let's get right into it. When most investors think about the beneficiaries of artificial intelligence or electrification, many are going to jump to the more obvious names that we've all become very familiar with, which are like the chip makers, the hyperscalers, but some of the more powerful and better opportunities are actually operate quietly in the background. And Amphenol is exactly that kind of company. Amphenol is really an enabler of all of the major technological and industrial trends that are driving capital spending today. The company manufactures and designs the connectors, sensors, and interconnect systems, which are the components that allow power and data to move reliably through the increasingly complex systems that are powering our world today. That might not sound particularly interesting or exciting or profitable, but these connectors and sensors sit at the heart of the AI data centers, cloud infrastructure, as well as electric vehicles, aerospace and defense platforms, and industrial automation. And as these systems become more complex, more power hungry, and more data intensive, the importance and the value of these sensors and interconnect systems become increasingly valuable. So Amphenol is especially interesting right now. The stock has performed extremely well over the last, really since late 2023. I mean, 2024 was good, and 2025 was really good. And you can see in the chart here that the earnings revision trend has been moving sharply higher over that time as well. And it continues to trend higher, which is why it currently has a Zacks rank 1 rating, which is a strong buy, and also sits in the top 3% of the industry rank, 7 out of 244. So yeah, sitting in these really critical industries, cloud computing, everything around AI, the whole infrastructure built around it requires all of these products that Amphenol creates. So we can see it also has a pretty interesting valuation, which is compelling. It's trading at 36.3 times forward earnings, which isn't particularly cheap. I mean, I don't think you'd say anything that's trading at over 30 times earnings is cheap. But in the context of the growth forecasts and really the high quality nature of the business, it's actually kind of an interesting valuation. So Amphenol's long-term median valuation sits at around 28 times forward earnings. So it's really just slightly above its average valuation. And as you can see here, the earnings, so its profits are expected to grow almost 39% annually over the next 3 to 5 years. So you can see this PEG ratio, which discounts the multiple by the earnings growth forecasts, is below 1, which is extremely compelling. And not only are profits expected to grow rapidly, but so are sales, not surprisingly. You can see the current quarter sales are expected to climb 35% year over year. Next quarter, another 23%. And this year is almost 50% increase in sales. So from 15 billion to almost 23 billion this year. And then next year is 12.4%. But, those might even be conservative because this data center boom and everything around it, and really the expansion of the grid and the electrification of everything is just such a major catalyst for Amphenol. And it just has an extreme, so while, AI is going to be a huge driver, it has, a diversified set of end markets. So yes, IT, data centers, but it also has clients in automotive, aerospace, and defense. And, these are also industries that are doing well. But, say there's a pause in AI. We constantly have these sentiment shifts around AI, and, it just has a very steady business, and it's grown really well through many economic cycles. So, but fortunately, it also sits in the fastest growing secular trends in technology and in business. So yeah, they also have a strong acquisition strategy. They just acquired a company from CommScope Connectivity, which is another not well known industrial technology business. But they just bought their interconnect and fiber optic business, and it's expected to add another 4 billion to sales this year. Yeah, so another thing that really is appealing about Amphenol is its technical setup. If you see any of my content, I highlight these kinds of bull flag sort of consolidations. It may seem like every stock has these, but it's only because I highlight all the ones that have these setups. So, we can see 2025 was quite good for the stock. It started the year at $70. During that April correction, it dipped all the way down to a little bit below 60. And from there, it really just grinded higher, unabated by any kind of action. And there's a lot more green days than red days, and even the red days were pretty minor. You can see, it consolidates and breaks out. It consolidates and breaks out. And this, after trending higher for the better part of 2 quarters, it spent almost all of Q4 2025 in this consolidation. And yesterday, it broke out from this consolidation, pushed to a new record high, and it, this is just an ideal setup. You want to see it hold up above this former level of resistance, and this thing looks ready to go and make its next leg higher. We can see that it jumped, it got upgraded, and yesterday that news about the acquisition from CommScope came out. So, the market found it to be a bullish catalyst, and when a stock reacts positively to certain news, it can set a trend to start. Thank you for tuning in. I hope you guys all found that valuable and informative. If you want more from Zax, please click the link below or go to zax.com/promo. Thanks.